I am excited to be sharing some information with you about exemption certificates and sales tax automation for Dynamics. So we work with all the Dynamics solutions, and I know most of you guys are specific to GP. It's just important to know that we do work with all the Dynamics solutions. So we're going to be covering today the challenges of manually maintaining sales tax compliance, and then talk about how technology can help make that a little bit easier, and then we'll have time for Q&A at the end. So the challenges of tax compliance, of course, we all know that it is a requirement. We don't have any choice on this, right? And in fact, about 47% of the state's revenue comes from sales tax. So it is very important to understand that, as states look at their deficits, it's not easy for them to continue to increase your property taxes and things like that. It's very visible to people. But it's a little bit easier to go after the folks who aren't paying their sales taxes and collect more sales tax, as well as add special taxes and things like that. So what that means for you is there's a lot more audits that are going on, right? So they're getting more scrutiny around different areas of business and making sure that all taxes is collected and remitted. So it is highly likely in your business lifetime that you will see an audit. You'll experience that. And of course, it frequently results in back taxes and penalties. We're going to talk a little bit more about that as we go forward in the presentation. And as you guys, I think 50% of you said that you're doing this manually. So it is labor intensive, and it's really hard, right? So I love to give the example. When I came to work for Avalara, I had to go through a lot of training. And at the end of the training, one of the things they wanted to do, because we're thinking we're all smart about sales tax, right? One of the things we had to do is a couple exercises. They said, you're selling this, here's your location of where the item originated, and you're selling it into this location. Go into their website, go into that state's website and that county and that town's website, and determine what the sales tax would be on this item. So we had these exercises we had to do. And no one was right? And we all thought we were right, but no one was right. And the instructors said, no one ever gets this right because it's so complicated. There's so many rulings and so many different scenarios that apply to different items that it's really, really very, very complicated. And for those folks on the phone who do that in their daily business, I'm sure you agree with me that sometimes it's clear as mud what is taxable, what's not taxable, and what applies to some of the solutions and products that you sell. And of course, there's opportunity for human error. And it is very time consuming. As a matter of fact, I think an excellent example is, we all voted this week, and I think probably no matter where you're located, you probably had special items on your ballot around sales taxes, right? So some sort of SPLOST or some sort of additional taxes that were going to come into play for roads or infrastructure, stadiums, whatever the case may be, that you voted on. So are you and your team sitting there now and researching every place you sell goods to make sure that you're prepared for those new taxes that are coming up? So it's a very, very laborious process, and it costs a lot of money, right, in labor and time to do that. So as we all know, it is not a revenue generating activity. So none of your customers say, wow, I do business with you because you guys do sales tax better than anybody. But they of course will come at you if you charge them the wrong sales tax, right? So it's very important to know that a lot of companies do audit that and maintain that, and they will come back at you if you charge them the wrong tax. So it is a very challenging task to be compliant. So a lot of folks, and we do a lot of shows and a lot of events, and I talk to a lot of folks about this very topic, and they say, well, what is the method that you use? How do you determine what the sales tax is for your customers? And I go, well, we use zip codes. Well, unfortunately, zip codes aren't really the answer. Zip codes are meant to deliver mail, and I'm going to show you an example here in a minute where, in Colorado, where a zip code would not make you compliant in any way, shape, or form. There's so much variance in any zip code that it's really not a safe thing to use. There's many different county level, township level, municipality level sales taxes that also apply. So you have to be very, very careful about that. So definitely, if you don't take away anything else from this session, make sure you understand that a zip code is not a compliant methodology to use. So as I mentioned, I'm going to show you an example here. So this is Colorado. Colorado is one of the more complicated states. And you'll see here that I'm going to zoom into a few zip codes. And within those zip codes, you'll see that there's several different tax rates, and they vary significantly, right, from 4.35% all the way up to 7.85%. So that's a big variance, right? And that could be in the same zip code. So it's very important to understand that that is just not even remotely compliant to just look at zip codes. And when we look at the zip code itself, or we look at the jurisdictions as well, one of the things to notice as well, look at all of these jurisdictional taxes that occur, right? So there's things, if you have a football stadium in this one jurisdiction, you're going to pay a 1/10% or 1/10 of a penny football district tax, right? So it's very, very hard to know that. Is it possible for your team to sit there and know that if they sell the Greenwood Village that these things come into play? It's probably not very likely, right? So it is very complicated. So like I said, the main takeaway is zip codes are not accurate, and it's very risky, and you would definitely not be compliant if that's the methodology that you're using. So as I mentioned before, there's a lot of jurisdictions. There's over 12,000 sales tax jurisdictions, and there's a lot of different things that happen. Like I said, the election coming up. I live in Atlanta, and we have a new football stadium happening and a new baseball stadium happening, and so depending on what county you live in, you're going to have those additional taxes that have now popped up in those jurisdictions. So there's constantly things going on, especially in major cities, that would change those rates on a perpetual basis. So once again, a lot of information to constantly be monitoring. And then of course we have tax holidays, and they vary. It's not consistent across all states when they do a sales tax holiday, and even what items are eligible for sales tax holidays. So once again, another complexity in trying to maintain your sales tax rates. And it's important to be accurate, of course. Once again, those auditors will come in, and they know the areas to look for, the areas that are complex, to make sure that you're being accurate in your calculations. So on top of those jurisdictions and all the complexity around that, item taxability is very complex. So it's something that varies between states. And I have an example or two, but I'll tell you a couple other ones as well. So, of course, when we think about software and hardware, there's a lot of debate about, is downloadable software a tangible item or not? So some states feel that it is, because if you would not have downloaded the book or the CD, you would have bought a physical one. So therefore, it is a tangible item. And some states just haven't made the ruling definitive yet, and so therefore they're not taxing them. So it varies, once again, state by state. Services. So when we think about like the state of New York, we love to give the example, if you buy a bagel in New York, it's food, and food's not taxable in New York. But if you buy a sliced bagel in New York, it is taxable. The whole thing is taxable because a service was added to it. So it gets very, very complicated. When we think about clothing, once again in New York, clothing's not taxable unless it's over $100. At the $100 level, it's considered a luxury good, and a state and a commercial commuter tax comes into play, but not a New York City tax until it hits $200, and then at $200, the 4% city tax comes into play. By contrast, Boston has a similar rule where clothing's not taxable until you hit $175, but then you only pay the incremental part over $175 in tax. So if you think about that, I know most of you guys use GP, it'd be impossible to program something like that in GP. I mean, you could, but it would be very, very complicated, and why would you, right? Because as soon as you probably got it programmed, then it would change. So it's something to think about. There's a lot of extreme complexities around items and what's taxable and how services come into play and how different items are perceived. So it's very, very complex. Here's another example here. So we see two different examples of a Milky Way bar. And when I do an in-person session, we have a few of these scenarios. And I always ask the audience to try to figure out why one is taxable, one's not. But since we're on this webinar, you can't respond. So I'll tell you why one is taxable, one is not. So the Milky Way Midnight Dark has flour in it. And because it has flour in it, some states, not all states, consider it to be a food item and not candy. so it would not be, excuse me, the Milky Way, the plain Milky Way has flour in it, not the midnight dark. So it would be non-taxable. So not all states would do that, but some states do. And energy drinks are another one that fall into that category. Some of them are perceived to be nutritious, and some are perceived to not be by different states, and there's a lot of variance. So I guess the net of this is, wow, you know, not only do I have to figure out what the jurisdiction is and all the finite taxes that occur based on all the things that are going on in that particular district, but I also have to know what an item is and what's taxable and what states consider things taxable. So it can become very, very complex. If you think about it in a matrix, it becomes very complicated. So on top of that, there's also some states who feel like that the taxes should be based upon the origin of the item. So you see the list here on the left, Arizona, Illinois, Missouri, and so forth. So they say when we ship items out of state, then it should be based on the origin of the item. Now, obviously, if you sell locally, it's not a problem. But if you ship it other places, then it becomes an issue because you do need to charge the origin tax. Now, when you add a service, they said, well, the service should be based on the destination. So that's once again a very complex matrix to build out. So the item is based on Arizona tax, but if I ship it to California, I have to charge tax on the service in California. That's kind of complicated. And then you have mixed source states like California, as you see there. So it's just very complex in some states. Most states, as you see, are destination-based. So once again, if I'm in Georgia and I'm shipping to Virginia, it'll be based upon where I ship to in Virginia. But there are some variations across the U.S., as you see here on this illustration, that have some different opinions about how taxes should be charged. So when we think about this, and we think about you know, the conversation with accounting professionals, and they said, well, gee, if I looked at my business here, they said, well, gee, I do 70% of my business, or 70% say that they do business online, but 39% of them say, I don't know if all the states I do business in, I don't know where I have nexus, I don't know if I'm charging the right taxes, and so forth. So it is very important to know. There's many things that have changed around nexus as well. So nexus is the responsibility or the liability to collect tax in a place that you're selling goods. So things that have changed is, do you have a remote sales force? Do you have people that get 1099s? Sales reps? Do you have commissionable people? Do you use third-party logistics? Do you have like a warehouse, a third-party warehouse that does distribution for you? So if you do, you have nexus in that state, right? The state where that location is. Do you have affiliates who are selling on your behalf? That constitutes nexus. So there's many things that also come into play here about where you have that liability. So a lot of accounting professionals say, you know what? I'm not sure if I know where I have nexus. I'm not sure if I'm charging tax in every place I have nexus. And it's, once again, a very complex discussion. There's another study done by Wakefield that said 44% of folks, accounting professionals that are responsible for this, they can't remember the last time they did an update. So a lot of folks do go to download tax tables and things like that. But they said, well, gee, wow, I don't recall the last time I did it. And then 48% of the people polled also said, if I were to be audited today, I'm sure that there were mistakes. And the average cost of a audit, to manage the audit, not the fines or penalties or taxes or back taxes or anything of that nature, but just to manage the audit, Wakefield has, in their research, said it's about $114,000 to do the audit itself. So it's an expensive venture, and it's, once again, something that will likely happen in your work life. So the other thing that auditors are looking for, this is something that's changed a little bit, is they're really scrutinizing exemption certificates. So if you're in the supply chain business, you have a lot of customers who are exempt, and they produce an exemption certificate. So traditionally, you sign up a new customer, they say, hey, I'm exempt. You say, hey, send me your certificate. You file it away, and you mark them in your ERP solution in GP, you mark them as a tax-exempt customer, and away you go. Well, most states now have their exemption certificates expire, right? So that is an area that auditors are also scrutinizing. So I live in Georgia, as I mentioned, and the state next to me to the west is Alabama. So as an example, Alabama passed a law last year that if they come in and audit you and they find you're grossly negligent, so say all of your customers have exemption certificates that you captured once again when they first signed up, but you've never made them renew them, you just have them, you know, stashed away from when they first signed up, and at Alabama they do expire, and you're grossly negligent, so you've never made anyone renew them, they can take away your right to accept exemption certificates for up to 3 years, as well as making you pay tax on every transaction that you've done, as well as penalties and fines. So it can be a extremely business-changing experience for you. So once again, another takeaway is make sure that you maintain these, make sure they're available, make sure that they're not expired, and you are very, very diligent about your process with exemption certificates. And I'm going to talk to you a little bit about how we can automate them here in just a moment. But make sure that that is something you do scrutinize in your business. So as we mentioned before, so a lot of folks, you know, typically use zip codes. They download sales tax rates, and they think that everything is going to be good, right? So they pick an average rate, apply it across all transactions. Every item is either taxable or non-taxable. There's no variance between those items based on the state, and away they go. So we see that a lot in our industry, of course, as we talk to folks. But we can talk about, you know, what that means. So if you were to be compliant, so the cost of compliance, the Aberdeen Group actually did a study last year and said, you know, what does it take to be compliant manually? And for those folks on the phone that said that they do this as part of their business, I'm sure you can relate to this. It is very laborious, as I mentioned before. And to be fully compliant, this is what they've found, their research found, for a small business and then a mid-sized business on the right, about 302 hours, which is a lot of time a year spent on being compliant. So it's pretty significant amount of time that could be used doing something a lot more constructive and perhaps revenue generating, right? When we break that down into cost, right, you see that it's over $60,000 for both types of companies, which once again it's a salary or two, right, depending on what your market is and what the role is. That could be 2 people's salary. That could be people in customer service or people that help generate revenue for your company or collect revenue in accounts receivable. So that's a very significant amount of money that is being really wasted in trying to be compliant. And once again, even at this point, it's highly unlikely if these people were to be audited that they would be fully compliant. So it seems like a sort of a fruitless exercise, right? So when we think about a day in the life of a compliance manager, these are all the things that happen. And once again, as some of you on the phone said that this is what you do. And it's painful, right? It's laborious, it's tedious, and it's kind of a hard task to do. And it's very overwhelming at the end of the day. So what can we do to help? So how can we think about automating this? So when we think about what Avalara has to offer, we offer an end-to-end compliance solution in the cloud. So when we think about AvaTax, which is our sales tax calculation engine, one of the other benefits, and this is just a free, wonderful benefit that occurs, we do address validation. So as I mentioned to you before, you know, of course we don't use zip codes. We actually go down to the rooftop level when we do our calculations. So to do that accurately, we need to validate that address. So if someone wants to enter a invoice or a quote and not put the whole address in or misspell a name or not put the full address in, we go out and do a rapid validation, and we'll replace that with valid information to make sure that the shipping address is correct, because we once again calculate down to the rooftop level, so longitude and latitude, and to do that we have to have an accurate address. So sort of a side benefit of our solution is that address validation. We then apply sourcing rules, so we apply all the things I talked about. You know, is the item taxable in this state? Is the customer taxable? or is he tax exempt? If taxable, right, then what is the jurisdiction? What are all the other things that occur beneath this? And we return that information back to you. We also have a solution for cert capture, which manages your certificate, exemption certificate management. So we have an automated way that we send a request out to your customers. They fill a virtual format online, and it returns it. We store it in the cloud. We maintain when it's going to expire and send a reminder out so you can once again renew that. So very, very efficient, sort of a set it and forget it kind of scenario. And then we can also do the returns, right? So we take all that information, we compile it on a dashboard, we enable you to go in and check it and approve it, and then generate the returns, and we can even do the treasury piece as well. So remit to all the jurisdictions. So if any of you, once again, do any work in Alabama, my neighbor to the west, you painfully aware that you don't just remit to the state, you have to remit to every jurisdiction in Alabama, which is very painful. And you know, that can be, once again, a laborious process that doesn't really benefit anybody, right? So it's just a time-consuming task to do. So how does our solution work? As I mentioned, we work in the cloud. So once again, we go out, we look to see, is that item taxable in the place it's being shipped to? Is the customer taxable? What is the jurisdictional rules? We return that in a nanosecond back to your invoice, so you're in GP just like you always are. It goes out and magically does this in the cloud, brings back that result, puts it on the invoice, and you probably aren't even aware that it's doing it, and then it compiles all that information onto a dashboard and lets you once again manage it there. So very efficient. It's a set it and forget it. Once it's set up, it does everything automatically. We have a team of folks. So I mentioned, you know, hey, are you guys going out and researching all the tax changes that occurred in the election this past week? Well, we have a set of folks who do, right? They're ex-auditors, tax accountants, and things of that nature. And that's their full-time job, is to go in there and research that information and have it teed up for when it goes into effect. So the day that it goes into effect, you log into GP, you generate an invoice, and all that stuff has magically been updated. Because once again, it's in the cloud. So everything is real-time, and you never have to worry about downloading something new or updating anything. It's automatically done in the cloud. The next time you log in, it's just that new content is there and available to you. So it makes it super simple. So it's a set it and forget it thing. So I mentioned to you before our exemption certificate solution. Once again, it has a wizard. It's really, really simple. It walks people through, you know, what do you resell? Where are you located? And just walks them through a tool, fills out the form virtually, and returns it back to you, and saves it, and also understands the rules around the expiry of that state. We also have a retail and e-commerce solution specific for exemption certificates, which are a little bit different than the standard one. So when we think about a solution, we think about outsourcing. Our question is, well, gee, you know, you probably outsource your payroll today, right? So a lot of times people go, well, gee, I don't know if I want to do that out of house. I want to do it in-house. Well, the same reason you would do payroll out of house, right? Using a solution like ADP as an example. Once again, there's a lot of compliance. There's a lot of rules that change constantly, right? And you don't have to worry about it because they worry about it. They have people who maintain that. You just log in every day, and whatever new content is available is already refreshed. It cuts costs and labor, right? Because you're not having to download tables, you're not having to download information, you're not having to interrupt your business by taking care of these things. And you're compliant. You know that you're always compliant the minute you log on. When you generate that invoice, you know it's a compliant invoice. You can focus on growth that way, and once again, reallocate some of the people that are spending time doing these other tasks to doing things more important, like collecting on past due invoices or focusing on new markets. So our commitment to you is to be the fastest, easiest and most accurate and most affordable solution for you to be compliant. We guarantee our transactions, we guarantee our calculations, and should you ever be audited, we stand behind our calculations, and we're there beside of you to to justify and support why those calculations occurred. So we pride ourselves in being able to confidently say that we are on top of all of this, and we have the best compliance solution and the most affordable one available today. So with that, let's go ahead and take some questions.
Okay, well, we have a couple in the queue right now. The first of which is, do I have to change any of my current Microsoft processes to use Avalara?
That's an excellent question. And no, you don't. So when you set up your items, you have a tax code. So today you have probably created some sort of table in your system for those items. And all you would simply do is change that code to Avatax, right? So Avatax means go out to the Avatax cloud and look for that item and its taxability based on that jurisdiction and all those rules I talked about before. So it makes it really simple. So you're just entering an invoice like you do every other day. Once again, once it's set up, it is something completely invisible to your team. It just magically does its thing.
Great, thank you for that. And the next question we have in queue here is, when taxability rules or tax boundaries change, do I need to do anything to update my tax schedule?
No, you don't. So once again, it's Avatax, which would then call us, right? So it sends that call out to the cloud, and in a nanosecond, it retrieves that information. And once again, our team, that's all they do is sit there and say, okay, in this jurisdiction, on this date, this will change from this to this, and that date it will go live, and you don't have to do anything. It would just, if you would have generated that invoice yesterday, it would have charged whatever 7% tax, and say tomorrow a new tax rule goes into play that's a quarter of a cent for a new stadium. Tomorrow, if you generated that invoice, it would charge 7.25% automatically, with no interaction from you whatsoever, no task on your behalf other than generating that invoice tomorrow.
I always like things easy, so that sounds great.
It's super easy. Yeah, it's a set it and forget it. It's that kind of magic thing that happens in the background, which is a wonderful thing, right? When you think about, once again, the task of trying to maintain this stuff manually and doing all the research that's involved. So it's completely, once again, invisible to your sales order team that this is going on in the background.
Great, and it looks like that's all the questions that we've had in queue right now, but we can give a little bit more time if anyone's thinking anything over. You can go ahead and enter it in either the chat or the question box feature. And Catherine, did you want to go over anything else, or did you have anything else to cover?
No, that's all I was going to cover today, but I wanted to thank everyone for their time, and then also let them know that we're available, of course, to provide more content for you and answer any specific questions you have, as well as your team at BMI. They're very, very plugged into us, and either of us would be glad to help you and answer your specific questions that you might have in your business.
Yeah, perfect. Well, if that is everything, we can get out a little bit early today, but like Catherine said, if any later questions do come up, feel free to reach out to herself or myself or even your account executive, and we can help you with anything you want to learn. On behalf of everyone at InterDyn BMI and Avalara, we just want to thank you for your attendance and have a great rest of your day. Thank you, everyone.
Thank you, everyone.